Good morning, everyone, and welcome to today's webinar. My name is Stefan Julen. I am responsible for investor relations in Switzerland. Today, I am joined by Stefan Kreuchi and Wenjie J from the HSZ Group. This webinar will start with a 15 to 20 minute presentation where Stefan and Wenjie will be sharing their views on Chinese equities. The presentation will be followed by a Q&A session. So please use the Q&A button at the bottom of the screen to ask a question. We will answer them at the end of the presentation. And now it is my pleasure to hand over to Stefan and Wenjie.
Good morning, ladies and gentlemen. Thank you for joining our webinar today. My name is Wenjie, and I'm here, the Executive Director at HSZ Group. Today, we're here with Stefan Kreuchi, CEO and partner of HSZ Group and portfolio manager of HSZ China Fund. Today, we're hosting a special seminar to talk about the upcoming 20th National Party Congress, which will be held from 16th of October, this Sunday. At the end of the seminar, we will have a Q&A session, so please feel free to type your question in the chat box. So first question to Stefan. Can you highlight to us the importance of this meeting?
Yes, the National Party Congress is held only every 5 years. There are about 2,300 delegates attending the NPC. The focus of the meeting is on the members of the Politburo. While hardly anybody questions that President Xi will be re-elected for an unprecedented third term as the General Secretary, there will be changes in key personnel at various levels of the Communist Party. Wenjie, can you give us a summary of the political structure of China's Communist Party?
Sure. So the Communist Party is led by the General Secretary of the party. He's taking the political role of the President of China. This role is currently held by Xi Jinping. And under him, there's a Political Bureau Standing Committee, or commonly known as China 7, including the General Secretary himself. The Premier Li Keqiang is another member of the China 7. Under the 7-member layer of the Politburo Standing Committee, there are additional 18 members of the Politburo, which consists of a total of 25 members. The members of Politburo are selected from the Central Committee, which is made of 380 people. And these people are elected from the National Congress, which is made of 2,000 people. And these 2,000 people are elected from the Communist Party members, which is about 7% of China's population. So the number to remember here is 1, 7, 25, 380, and 2,300. Next question, what are the changes to the personnel we should expect from this year's NPC?
Let's first have a look at the 25 members of the Politburo, which is the highest policy-making body in China. A significant number of the Politburo's current members are expected to retire after the 20th Party Congress as they reach the official retirement age of 68. It is not clear, however, whether President Xi will stick to this tradition of the retirement age of 68. From the 18 members of the Politburo, 9 would have to leave as they are over the retirement age already. Then let's turn next to the Politburo Standing Committee that consists of 7 members who are also part of the 25 members of the Politburo. Out of the 7, 2 will be over the retirement age at the time of the Congress. 3 of them would reach retirement age within 1 to 3 years. As a result, the 20th Communist Party Congress in China will be an epoch-making event that will see a new generation of leaders being promoted to the top jobs. Some who are already in key positions could be given more important roles, while younger faces may start to position themselves for leadership roles in the years to come. Wenjie, are there any candidates we should watch for?
Sure. So one to watch for is Mr. Ding Xuexiang. He's 60 years old. He's President Xi's chief of staff and a member of the Politburo and a frontrunner for the Politburo Standing Committee. Another to watch is Mr. Liu He. He has been the trusted economic advisor to President Xi for many years, but he is expected to retire as he is now 70 years old. A potential successor could be He Lifeng, and he will be the new economic advisor to Mr. Xi. He seems to be more pro-growth. He's currently heading the National Development and Reform Commission, or commonly known as NDRC in China. Hu Chunming, Chen Mi'er, and Li Qiang are also the potential members for the Politburo Standing Committee based on the media report. And we actually have a presentation material which has the pictures of these members. So later we can show it to the audience. But for now, let's move on to the next question. What will change after the NPC?
We don't expect any major changes after the NPC. Having said that, we expect more dynamism in post-Congress as confirmed personnel changes will lead to better policy coordination and implementation, especially on the local government level. As a reminder, the National Party Congress is the Congress of the Communist Party that focuses on personnel. The actual economic policies are decided by the two sessions meeting that will be held at the end of March next year. Wenjie, where do you think will be the emphasis with regards to domestic policies post-NPC?
So in a nutshell, we expect under the continued leadership of President Xi, stable policy will remain to be the focus. This includes some long-term goals of decarbonization or green energy, manufacturing sectors upgrade, supply chain security, especially the semiconductor area, and common prosperity. We are trying to position ourselves accordingly to optimally benefit from the strategic policy directions in China. Why does China stick to its zero COVID policy, Stefan?
Well, there are a couple of reasons for this. One, of course, is that the vaccination rate, especially among the vulnerable elderly population, is still lower than for the average population. The vaccination rate for the people above 60 years is only 85% versus 90% for the whole population. Another issue is the low number of intensive care units available in China. Currently, there are only 3.6 ICU beds per 100,000 of population. This compares to almost 10 times more in some of the Western countries. We expect, however, the COVID measures to be relaxed towards or after the two sessions meeting at the end of March 2023. On the macro side, Wenjie, which are the key risks you're looking out for?
Sure. So there are many risks in China, but in short term, we think the COVID policy, the real estate sector, and currency weakness are the major concerns. So strengthening US dollar is a phenomenon we all observe globally because the Federal Reserve is raising interest rate faster than other countries. But however, this is a short-term factors. But in the long term, we think the fundamentals is more important. So the economic fundamentals will drive the exchange rate between US dollar and Chinese renminbi. So in the longer term, we think the number will speak for China. We think it's also worth to highlight some of the bright spots, the fundamental strengths of Chinese economy. These include the healthy financial sectors, the decoupled interest rate cycle, and also low inflation rate. So unlike the last decade, shadow banking issue are becoming less important in China. This is after a very painful but yet important deleveraging period we have experienced. And also at the same time, the Chinese government is keeping a very accommodative monetary policy. So far this year, we have seen China actually cutting the interest rate, whereas the rest of the world is actually raising the interest rate. So lastly, the inflation. This is also well controlled at below 3% in China. On the property sector, we see the policy focus on the delivery of property projects that are subject to completion risk. We also see some relaxations of some other real estate related restrictions. And this is something actually President Xi supports as well. The other positive is on the regulatory cycle, which seems at margin improving. What is your long-term view of China?
We strongly believe in the long-term growth opportunity in China. China is already the second largest economy in the world, but the GDP per capita is still only 1/6 of the US, so meaning there is a huge upside potential. In addition, China is a huge domestic market with 1.4 billion people. Out of those, still around 600 million live with less than 150 US dollar per month. So there is a huge upside in terms of domestic consumption. I think we need to remind investors here at this point in a year that has been difficult that, to keep the long-term perspective. I think the recent weakness is a good moment to allocate to China or increase already existing allocations to the China equity market. Wenjie, where do you see GDP growth for 22 and 23?
Sure. Our view is not very different from the consensus, and if expecting the China GDP to grow at 3 to 3.5% in 2022 and 4 to 5% in 2023. We do expect a recovery in the second half of 2023. And so the key message we really want to deliver to you today is the GDP growth in China for 2023 will be higher than 2022. So this is a clear contradiction from the rest of the world, where GDP growth is likely to decelerate. So I'll give you some numbers. So OECD recently has updated its global GDP forecast. It's expecting about 3% global GDP growth for 2022, but only 2.2% in 2023. So I think the uncertainty still remains, of course, with regards to the timing of the relaxations of the COVID policies in China. Stefan, how should our audience invest in China?
Definitely no index, no ETF, not passive, but invest via actively managed funds in good companies where you know what you own. What we have observed is the inefficiencies in the Chinese market that we can harvest actually have become even more pronounced during COVID. So investors should take advantage of this by investing in active funds based locally, such as the HSZ China Fund. We also want to remind global investors of the low correlation of Chinese equities with global equities. Currently, that correlation is only 0.32, and for Swiss investors, it's even better because the correlation between the MSCI A shares and the Swiss market is only 0.18. In terms of valuation, today the MSCI China is trading at 10 times P with a 9% return on equity. In comparison, the HSZ China Fund, which is very selective and in terms of stock picking, is trading at 23 times P and the ROE of 22%. In terms of growth, also there we see a difference between the market and ourselves. We expect the weighted EPS growth for 2022 to be around 16% and for 2023 to be around 33% on a weighted basis for our HSZ China Fund. As you know, the HSZ China Fund invests primarily in entrepreneurial Chinese companies with a strong pricing power. We focus on companies with a franchise or moat that can pass on higher input costs. This is especially important in the current inflationary environment that we observe around the world. For example, one of our holding called Media in the white goods sector announced already 3 price adjustments across all product lines this year. The same holds true for another holding called Oriental Yuhong Waterproof, which is in the infrastructure. And this company has increased their price already 3 times this year. In terms of our focus, we focus on renewable energy, hard technology, factory automation, infrastructure, and domestic consumption. Let's stop here and see if we have already received some questions from our audience. I would like to remind you that you can still ask questions while we are answering the questions we have already received.